All right, good afternoon, everybody. Daryl Porter here, your Kingdom Wealth Coach, coming to you guys with another financial nugget. All right, I want to talk to you guys from the topic of savers or losers. Okay, I know that's a very, very bold statement, but it's a true statement. Savers are losers, and savers have been losing the game since 1971. Okay, when President Nixon took us off the gold standard, that's when the game changed. And what's even making us lose even more today is because of a system that the banks have implemented called fractional reserve banking. Okay, the concept of fractional reserve banking has been around for thousands of years. Okay, a merchant who wanted to travel across the country would take his gold and his silver and deposit it with a banker for safekeeping. Okay, that banker would then give that merchant a claim check for his gold and silver on a piece of paper. Okay, that merchant would then take that claim check across the country with him, and then he would buy his goods on the way. Okay, so the seller of those goods, the seller could go then to the bank, and they can take the claim check to redeem it for the gold or the silver, or they can take the claim check and continue to use the claim check to in the marketplace. Okay, it was a great system, guys. People gravitated to it because of the fact that the claim check was more easier to carry around in their pockets. It was more convenient, and at the same time, it was easier to do transactions from day to day with this claim check. So people gravitated to it. Okay, it was a good system as long as those who owned the gold and silver didn't go back to the bank to claim their gold and silver. It was good. It was a great system. But here's the problem, guys. If the owner of the gold and silver ever thought that the banker was producing too many claim checks on their gold and silver, then they would have done what they call a run on the banks. All right, they done went and took and hey, I want all my gold and silver out, and then because at this time they was actually was printing too many of these claim checks, it wouldn't have been enough in there. So if that would have ever happened, guys, it would have collapsed. It would have collapsed the system. So the money changers, those who operate or control the money system, came out with a system to prevent that from happening, which is now the fractional reserve banking system. Okay, this is making you a loser even more, guys, because of this system. I'm going to explain it to you right now. So the fractional reserve banking system, this system now requires banks to maintain a reserve inside the bank. Okay, everything couldn't go out the bank. You had to maintain a reserve. And if I remember correctly, they had to keep a 10% reserve. So whatever came into the bank, 10% of it had to be reserved. Okay, had to be put away inside the bank. Everything else could be used in the marketplace, could be loaned out on loans, and whatever banks do. Okay, so let's take a look at how that looks. So if I went to my bank and I deposited $100 into my savings account, that $100 would have became an asset for me. How would it have become an asset? Because remember, banks don't have money, guys. Banks operate off of OPM. OPM is other people's money. That's how the banks make their money. Okay, so I brought in my deposit because I loaned my money to the bank. They're going to give me an annual percentage rate on my money. Okay, and let's say, for example purposes, that the bank is going to give me 5%. Now remember, asset means money in. Okay, it means that your asset is producing more money. So whatever you do produces more money, that becomes an asset. Okay, and then liabilities is money out. So that $100 becomes a liability to the bank because they have to pay me interest on it. So it becomes an expense for them. So the $100 goes on the bank's balance sheet as a liability, and then it also goes into their expense account because they're having to pay me 5% APR on the money that I loan to them. So from their expense account, it goes to my asset column on my balance sheet because now that $100 becomes an asset now because I'm earning money from it. So that asset now produces income for me. So 5% of $100 would have gave me a $5 increase in my income at the end of the year. So you see how that works? But guess what? The banks not just going to produce liabilities, guys. The banks had to have a way to produce assets to keep itself in business. And how do they do that? Well, part of that fractional reserve banking system, guys, that means now from the $100, they got to keep $10 in there. That means $90 can be loaned out or put into the marketplace. But the banks have the authorization to loan out 10 times that amount. So that $90 quickly becomes a $900. Okay? $900 in loans. And the bank is definitely going to make money off of that because, again, if you watch my previous video about the banker's secret, the rule of 72, they use this rule because they understand it. They know how to make their money double. So you're not going to get an interest rate from the bank no lower than double digits, guys. You will not get a loan from the bank lower than double digits. Okay? And if it is lower than double digits, it won't be no lower than 8%. Because they understand how the rule of 72 works. So in this example, we're going to use 10%. So you went in and you got that loan for $900. And the bank is charging you a 10% interest rate on it, on that loan. This makes you a loser, guys, because what happened was, where did $900 come from? Wasn't no more deposits. He was the only one that deposited. That $900 was created out of thin air, guys. Created. And now it's not even in physical form. It's all through computers. It's digital. But it's still created. It put $900 out into the marketplace. And the more money they print, the more devalued your money becomes, guys. So that $100 that you got sitting in your savings account, every time they produce some money, every time they produce a loan, it's decreasing the value of your money inside the bank. So again, savers become losers. So you earn $5 and the bank earned $90. So you losing on that side too. You put $100 in their bank, they was able to create $900 from the $100 that you put in there. They gave you 5%, in which you earn $5 at the end of the year, but then they earn $90 off of money they created from the money you put in their system. You see how this is working, guys? Now, we're using small numbers right now. Just imagine banks are taking in millions and billions of dollars, guys. So imagine how this is working. And your little $200, $300, $400, $500 that you got sitting in the bank, whether it's in your savings or checking account, it doesn't matter which account it is, you're losing money. Every time they produce a loan, keep it in the back of your mind, guys, that you're losing money if you have your money attached to this system. That's why this system, again, guys, you got to pull away from this world system, because the world system will continue to keep you poor. You got to find somewhere else to put that money. Okay, I just so happen to be a part of a company that I partner with that will allow me to open up a gold and silver savings account to where I can do the same thing I would have done with the bank, I can do with this gold and silver savings account. And what's the difference, guys? The difference is now I'm putting my money into gold and silver, taking it outside of the banking system, because remember, the dollar's not attached to anything. So I'm taking my money and putting it into gold and silver, and now I've taken myself out of the banking system. I've stopped my money from losing value. So no matter how many loans they produce, that money that I took out of the system is protected because it's not in the system no more. So they can make all the loans they want. I'm protecting my savings now. It's called financial insurance, guys. You have to do this. You got to find a way to protect what's yours. Protect your assets. This is how we do it. So now that you know, you've been empowered, guys, now you understand how the banking system works. Now you have the right knowledge. Now you can apply the right understanding. And through applying the right understanding, guys, you're going to get the right results. The right understanding is knowing now how to take that money from the banking system and put it somewhere else. So again, this is how you do it. So if you want to know what I'm doing, hey, reach out to me, guys. I can show you exactly how to keep your money from losing value, how to protect your money, how to create financial insurance for your money and protect your assets, and most importantly, guys, take you out of this world banking system and place you back into God's system. That's the key to all of this, guys. That's why I'm the founder and creator of Kingdom Wealth Creators, guys, this is what we do. This is why I make these videos, to teach people how to move from this system. We in this world, but we're not of this world, guys. And we don't have to operate from the world system. Chaos, people are frustrated, all kinds of things are going on. But you know what? My frustration level's coming down. My stress level's coming down because I'm learning how to operate within God's system inside the world system. God always has a way of escape for his people, guys. Even inside this system, God is allowing his people to escape from it. You got to take advantage of it. All right, reach out to me, guys. If you want to get involved, want to know what I'm doing, I definitely will share that with you. Anybody that shares this video with you, get back with them. I guarantee you they can show you how not to be a loser, guys, and show you how to win every time. Very important. All right, guys, God bless. Take care. This is Daryl Porter, your Kingdom Wealth Coach, founder and creator of the Kingdom Wealth Creators, coming to you with another powerful financial nugget. I hope it blesses you guys. All right, God bless. Take care. Until my next video, guys, we'll see you over the top.